Michael Burry. I'm sure most of you guys probably already know who he is. He's the guy from the movie The Big Short. I don't know if you guys have watched that film. It's quite a famous financial film. But basically what this guy did was he shorted the housing market, and the housing market crashed in 2008 and he made a lot of money. Now, back in those days, the housing market was very, very strong. People only thought the housing market's going to keep going up and up and up. And when he made this big short, even his own investors thought that he was crazy. But of course, hindsight is a great thing, and we all know that he made a lot of money. Now, the interesting thing about that is that 2021, today, Michael Burry has made another prediction but this time it's on the stock market. And he's predicted that, in particular, index funds are in a bit of a bubble that may pop. He's made some very alarming tweets and alarming comments on the stock market that we need to pay attention to. But before we do that, I just want to quickly go over what happened in 2008, the situation there, and how it's relevant to what's going on today. So let's take a watch at this 60-minute clip.
Right, we bought basically short $8.4 billion of credit default swaps related to mortgages or financial companies.
You must have been pretty confident that this thing was going to blow up.
Well, we had a giant bet for us, and I was extremely confident in the outcome.
Were your investors as confident?
I think a few investors were.
Some of them thought you were crazy. Some of them probably thought you lost your mind.
I know for sure that some of them thought I lost my mind.
Okay, so that's interesting. Most of his investors actually were not a fan of this short position that he had on the housing market. Most investors, of his own investors, thought that he was crazy for making this big short. And the other thing was, he was very certain that the housing market would collapse. Now we fast forward to 2021 and something similar is happening. He's very confident on his position and most people do not agree with him.
So you made a ton of money?
Made a ton of money. Much more than I ever imagined, I'd ever have.
Were your clients grateful?
I think a lot of clients were just glad to be done with it at the end.
Even though they doubled their money?
Well, we made $725 million, I think.
They made $725 million and some of his own clients weren't even that happy. But that's beyond the point. What's interesting now is today, if you go to Michael Burry's Twitter and some of his older tweets, he's made a connection between what was going on in 2008 to what's going on today. So let's just take a look at what he's been saying. So this is his first tweet. Fads today, Bitcoin, electric vehicles, SaaS, meme stocks are like housing in 2007 and fiber.com in 1999. On the whole, not wrong, just driven by speculative fever to insane heights from which the fall will be dramatic and painful. Frauds too, the WorldCom and Enron of today. So Burry's making this connection between what was going on not only in 2008, but what was going on in 1999 and what's happening today. So what happened in 2008? Basically, there was a lot of debt in the system. People thought the market could only go up and up and up. And there was a lot of speculative investing. It's the same thing in 1999. Oh, tech stocks are going to make so much money. You can only make money when you invest. And everyone wanted to be an investor. We all know what happened. I think it was in 2000 where the stock market crashed. Now, the same thing, at least Burry thinks, is happening today with the likes of Bitcoin. That's what he's saying. With the likes of electric vehicles and certain meme stocks as well. So that's very interesting. Michael Burry is a smart man. Sorry for the noise going on in the background if the mic picks up any of that. Got a few chickens in the background. But Michael Burry is making the connection between that period back then and what's going on today. He's also made a lot more tweets than just this one. Okay, he said, people ask me what is going on in the markets. It is simple. The greatest speculative bubble of all time in all things. by 2 orders of magnitude. Geez, that's a bold statement to make. If you go through Michael Burrys' Twitter, which you can't do so anymore, which I'll explain why later, but he's made a lot of these bold type predictions. Here we go. Perhaps the last gasp of the bull market. As the shorts capitulate, it's not really different this time. Hashtag bull trap. So, I guess he's referring to the people saying, this time it's different, the technology's different, we've got things like electric vehicles now, we've got things like genome stocks and all of these high growth sectors. What Burry's saying is, no, this time it's not really different. He said, if you are an older sort, find a few young guys that are doing well with their stocks the last year. First, ask them about their successes, congratulate them, get them going, then ask them what each company does. So basically what he's saying here is there's a lot of investors investing in the stock market who don't really know what they're doing. They don't know the underlying business of the stock that they've bought. They don't know about the company's financials. They probably don't know how to read a balance sheet, but they just think that their stock is going to be the next big stock of the future. It's changing things, but they don't understand the actual value of each stock. So he's just talking about investors not having a deep understanding of what they're invested in. So let's move on to the next one. Burry says, this is very much like the bubble in synthetic asset-backed CDOs before the great financial crisis, in that price setting in that market was not done by fundamental security level analysis, but by massive capital flows, massive amounts of money going towards stocks. And as you can see, the rise in passive investing just keeps going up and up. 2000, 12%, 2005, 16%, 11, 24%, 2016, 36%. Basically what he's saying is that there's more passive investors, right? We can see by this graph. So they're just investing in the overall market as a whole, but they don't understand the value of each individual stock like a value investor might. Move on to the next tweet. Big short investor Michael Burry believes Reddit-favored meme stocks are set to crash like the dot-com and housing market bubbles of previous decades. We're running out of new money available to jump on the bandwagon, Burry told Barron's. And as we know, Burry was one of the first investors to spot and profit from the subprime mortgage crisis. When he says we're running out of new money, he's talking about things like stimulus checks coming through, and people, a lot of them, they didn't need the stimulus checks. This was just extra money. This was just the Fed printing money and the government giving it out to people. They didn't know what to do with the money, so they put it in the stock market. They put it in things like meme stocks. And Burry's saying this is causing these particular meme stocks to form into a bit of a bubble. I don't know how intense he thinks the bubble is. What else has he said? If I put GameStop on your radar and you did well, I'm genuinely happy for you. However, what is going on now, there should be legal and regulatory repercussions. This is unnatural, insane, and dangerous. Okay, GameStop. I'm sure most of you guys know what happened with GameStop. Basically, a lot of new investors invested in the company to put pressure on the big hedge funds shorting the stock, and they did really well. They pushed GameStop up really high in terms of price. We'll see here. It was earlier this year, around January, went from $18 to $347. But Burry thought this was unnatural. It's too much new money going into it, too much new investors. And he predicted a crash, which it did crash. Sorry, I'm on the wrong screen. You guys should be looking at this one. But yeah, it did crash, but now it's gone up and up and up again. And I'm sure Burry thinks GameStop is currently right now in a bubble because there's a lot of new money in the company. What else has he said? So Elon Musk, yes, I'm short Tesla, but some free advice for a good guy. Seriously, issue 25 to 50% of your shares at the current ridiculous price. That's not dilution. You'd be cementing permanence and untold optionality. If there are buyers, sell that Tesla souffle. So he thinks even these new high growth stocks like Tesla are in a bubble, and he even shorted them. It's the same story. You guys know what I'm talking about. It's a lot of new money in these types of companies. That's what Burry thinks anyway. I personally think that Tesla may justify its current price, but this is about Burry's opinion, not my opinion. Now, this is where it gets interesting, because he made a lot of tweets on the stock market and different stocks that he was investing in and shorting. What happens is the SEC sees all of these tweets that he's making, and they're not happy with it. It says here, tweeting and getting in the news lately apparently has caused the SEC to pay us a visit. Lovely. No more tweets. And if you go on Michael Burrys' Twitter now, you'll see more political type things. You don't see much financial things. The only way I got hold of all of these tweets was from another Twitter account, which was called Michael Burry Archive, which goes into all of the tweets that he'd made in the past. So I don't think he's going to be making much more tweets like this one. He says, people say I didn't warn last time. I did, but no one listened. So I warned this time, and still no one listens. But I will have proof that I warned.